More than $20 million in long liquidations as Bitcoin falls to $41,000. $5.8 billion burned, second largest crypto network records 2 million Ethereum destroyed in 7 months. Fed Chair Jerome Powell hints at aggressive rate hikes after saying inflation is much too high, etc. are the top stories in crypto space today. Stay tuned till the end of the video so that you will not miss any important updates. Welcome you all to Daily Crypto News channel. Do not forget to subscribe and press the bell icon to get regular notifications. $5.8 billion burned, second largest crypto network records 2 million Ethereum destroyed in 7 months. This week, the Ethereum network's burn rate reached a milestone by surpassing 2 million Ethereum burned worth $5.81 billion since 5th August 2021. Metrics show the crypto network has a 24-hour burn rate of 1.74 Ether per minute, which equates to roughly $5,000 worth of Ether destroyed every 60 seconds. 2 million Ethereum burned, more than $5,000 in Ether destroyed every minute. During the last year, the Ethereum ETH network has seen a slew of changes, and 7 months ago the network implemented the Ethereum Improvement Proposal, EIP 1559 on 5th August 2021. Ever since then, the network has been destroying Ether at an extremely rapid rate, as EIP 1559 transformed the algorithm tethered to the base fee per gas in the protocol, and it burns the base fee per gas. Ethereum advocates like the idea because it makes the crypto network's supply deflationary. At the time of writing, and since 5th August introduction of EIP 1559, Ethereum has destroyed approximately 2,001,495.6 ETH. Using current exchange rates on 21st March 2022, the amount of Ethereum burned is equivalent to $5.81 billion in USD value. While more than 2 million Ether has been burned, the speed of burn per day has been coasting along at 1.74 Ether per minute or roughly $5,059.05 per minute using current Ether exchange rates. Measuring the burn rate by hour shows the network destroys 1.51 ETH per minute. On 21st March, the non-fungible token, NFT, marketplace OpenSea is the largest Ether burner as the NFT market has destroyed 229,922 Ether worth $790 million. Average, everyday Ethereum transactions represent the second largest burner as ETH transfers have destroyed 185,920 Ether worth $674 million using today's ETH exchange rates. The decentralized exchange, DEX, platform Uniswap v2 is the third largest burner with 126,576 Ether burned, and Tether, USDT, transactions represent the fourth largest burner with 92,325 ETH destroyed. Other notable burners include SwapRouter, Uniswap v3 MetaMask, and the stablecoin USDC. At the time of writing, Ethereum has gained 59% during the last 12 months against the US dollar and 13.6% over the last 2 weeks. In terms of market dominance among the 13,311 crypto assets in existence valued at $1.9 trillion, Ethereum's $348 billion market cap represents 17.8%. On Monday, the average transaction fee on the Ethereum network is 0.0028 ETH, or $8.15 per transfer. The current median-size transaction fee on the Ethereum network is 0.0012 ETH, or $3.60 per transaction. What do you think about the 2 million Ethereum burned so far? Let us know what you think about this subject in the comments section below. More than $20 million in long liquidations as Bitcoin falls to $41,000. Bitcoin had broken above $40,000 again last week, marking the digital asset's fifth break above this point this year alone. Given that it has been trending in its $36 to $38,000 support level before this, traders had taken to placing their trades in anticipation of the cryptocurrency's next movements. The digital asset had barreled towards $42,000, leaving positive sentiment in its wake, but resistance at this point proved devastating for long traders. Bitcoin long traders suffer losses. A recent pullback in the price of Bitcoin saw a significant amount of long liquidations rock the market. Bitcoin, which was expected to early break through of $42,000, has met more resistance than anticipated. Bears had put up one hell of a fight at this point, and in the end, the bulls had succumbed to this pressure, causing the price of the digital asset to revert back down. In the wake of this had been massive liquidations. In a single hour, Bitcoin saw more than $20 million in long liquidations happen in the early hours of Monday. These liquidations ramped up as the price fell back below $42,000, eventually reaching as low as $40,889. At this point, BTC had recorded one of the highest hourly long liquidations in its history. It came out to almost $21 million in longs liquidated just as the asset fell below $41,000. More than $53 million BTC liquidated in 24 hours as per the CoinGlass website. In the last 12 hours as at the time of this writing, Bitcoin had seen more than $31 million liquidated. Covering a wider stretch sees $53.63 million in BTC liquidated over the past 24 hours. Crypto market suffers liquidations. As the price of Bitcoin and other digital assets in the space had turned green, investor sentiment had grown more positive. It is with this positivity that long traders have been trading. Bitcoin, which had made it back above its 50-day SMA, had established another bullish trend, one expected to ride through above $44,000. However, as is typical of the crypto market, the price of the asset had gone back down. Naturally, the rest of the market had followed the trend of Bitcoin, seeing them suffer the same fate. Although other assets did not record liquidations as high as that of BTC, they were hit by the wave nonetheless. The second largest cryptocurrency by market cap, Ethereum, has seen more than $5 million liquidated over the past 12 hours and a total of $27.37 million liquidated over the last 24 hours. In total, the crypto market has recorded a cumulative value of $70.13 million in liquidations in the last 12 hours. And for the last day, $167.72 million have been liquidated. Bitcoin has once again resumed its recovery trend, breaking above $41,000. It is currently trading at $41,075 as of the time of recording. Fed Chair Jerome Powell hints at aggressive rate hikes after saying inflation is much too high. The 16th chair of the Federal Reserve, Jerome Powell, said that America's inflation is much too high on Monday, and he further explained that the U.S. central bank is willing to raise rates more aggressively. Of the heels of the first benchmark interest rate increase since 2018, Powell stressed that the Fed will take the necessary steps to ensure price stability is feasible. The Fed chair further said raising the federal funds rate by more than 25 basis points may be appropriate. Powell envisions raising the federal funds rate by more than 25 basis points. On 16 March 2022, the U.S. Federal Reserve increased the federal funds rate for the first time since 2018, and the central bank expects 6 more rate hikes this year. Inflation has jumped a great deal in the United States in a short period of time, as the U.S. Labor Department's February Consumer Price Index, CPI report indicated that inflation has risen at the fastest pace since 1982. On Monday, following last week's rate hike, Powell vowed the central bank would be aggressive toward ensuring price stability returns to normal. Powell explained the Fed's position during remarks at the National Association for Business Economics. The labor market is very strong, and inflation is much too high, Powell detailed. The central bank's chair noted that in order to tame inflation, the federal funds rate could be raised higher than the traditional 25 basis points (BPS) raise. Powell added, "We will take the necessary steps to ensure a return to price stability. In particular, if we conclude that it is appropriate to move more aggressively by raising the federal funds rate by more than 25 basis points at a meeting or meeting, we will do so. And if we determine that we need to tighten beyond common measures of neutral and into a more restrictive stance, we will do that as well." Fed Chair hopes supply-side healing will come over time. Powell's remarks follow a great number of investment banks that predicted the Fed would be more aggressive this year, well before the first rate hike. Furthermore, the president of the Federal Reserve Bank of St. Louis, James Bullard, issued a statement that calls for aggressive measures amid the inflationary pressures plaguing the country. Meanwhile, Powell explained on Monday that the world may be settling in on a new normal, but things are still uncertain, especially with the ongoing Russia-Ukraine conflict. It continues to seem likely that hope for supply-side healing will come over time as the world ultimately settles into some new normal, but the timing and scope of that relief are highly uncertain, Powell told the attendees at the National Association for Business Economics. In the meantime, as we set policy, we will be looking to actual progress on these issues and not assuming significant near-term supply-side relief. The central bank chief further added, "In normal times, when employment and inflation are close to our objectives, monetary policy would look through a brief burst of inflation associated with commodity price shocks. However, the risk is rising that an extended period of high inflation could push longer-term expectations uncomfortably higher, which underscores the need for the committee to move expeditiously as I have described." Analyst Swain Henrich calls Powell's commentary performance art. Wall Street's top indexes shudder after Powell's statements. Following Powell's remarks, the Fed chair received some criticism from a number of analysts and economists. Northman trader Swain Henrich told his 360,000 Twitter followers that the central bank chief's commentary was performance art. If he believed in the urgency of all the things he said today, he should have raised by 50 BP last week. He didn't. They literally squeezed their balance sheet to new all-time highs in time for last week's Fed meeting, Henrich tweeted. In addition to the macro and technical analyst Henrich, the gold bug and economist Peter Schiff shared his 2 cents about Powell's most recent comments. If the Fed really is committed to doing whatever it takes to fight inflation and shrink its balance sheet, why did it buy an additional $46.3 billion in government debt during the week ending 16th March? Schiff asked on Twitter. That pushed the size of the Fed's balance sheet to a record high $8.954 trillion, he added. Powell's commentary also sent shock waves through Wall Street as the top indexes saw losses on Monday. Closing the trading day, Nasdaq, NYSE, S&P 500, and the Dow Jones Industrial Average were all in red. Reuters reporter Stephen Culp explained on Monday that Wall Street slipped after Powell's hawkish remarks. What do you think about the Fed Chair Jerome Powell talking about aggressively raising rates by more than 25 basis points? What do you think about the criticism Powell and the Fed received after his statements? Let us know what you think about this subject in the comments section below. Thank you for watching. Subscribe to our channel and press the bell icon for regular notifications when we post a new video. If you like the content, kindly share this video with your friends and press the like button. Happy learning!